Uranium prices have fallen more than 70% since the Fukushima accident in 2011, with some companies now having to halt operations because of falling prices. We're talking uranium today with the CEO of UEC. He's also the CEO of gold mining, Amir Adnani. Welcome back to the program.
Yeah, thanks to bring me back. And we've definitely been talking about uranium on a number of shows.
Yes.
The other yellow metal.
The other yellow metal.
Right.
And the main question here is, Amir, with uranium at $21 here, how can uranium companies make money? How can they survive?
The only way uranium companies have survived up until now have been under long-term contracts. So if 6 or 7 years ago they signed a long-term contract, which many did, at a higher price, they had a hedge and a cushion that allowed them to keep making money even if the spot price was at $20. Many of those long-term contracts are expiring this year and next year, and as those contracts roll off, the producers are staring at a uranium price that they can't make money at. There isn't a single uranium mine on the planet that can make money at $20 per pound. And that's what really leads to the news that has come out recently when you're starting to see the shutdowns.
Okay, so with the shutdowns that we're seeing, I guess the argument is that, well, this should be bullish for uranium prices, right? If we're going to see less supply come out.
To put the magnitude in order in terms of how bullish it is, I think the shutdown on November 8th of MacArthur River is the biggest catalyst for the uranium sector since Fukushima. And put it in perspective for a second, MacArthur River produces 10% of world uranium production or supply, 10%. Saudi Arabia in the oil market is about 12% of the oil market. So if you and I woke up tomorrow and Saudi Arabia was shutting down oil production, wouldn't that be bullish for the oil price? And so that's the kind of impact it has. In addition to that, it's low cost and it's in Canada. So it's in a very secure jurisdiction and it's being shut down. Uranium prices are responding, so it's not even a theoretical debate. Since the news came out, uranium prices are up 25%. And even midday, as you and I are speaking, I think the bid ask was over $25. And it's a nice trend. 25 is nothing to write home about, but it's responding to this news.
So what do you say when people say, well, if you're investing in uranium companies, they're just speculative plays?
Well, first of all, if you think electricity and electricity that we use in everything is a speculative play, then I guess uranium is a speculative play. Uranium is used for one thing and one thing only: electricity generation. We got 7 billion people in the world, and we all want to charge our phones and electric vehicles. It's the fastest growing segment of the energy world is electricity demand. And so when you look at the fact that we have more reactors under construction worldwide today compared to pre-Fukushima, more reactors being connected to the grid in 2016 and 15 than in 25 years, I think it's a growth industry. There's nothing speculative about that.
So I know you obviously wear two hats. You work in uranium and gold.
I like yellow metals.
I know you like yellow metals.
I should have worn a yellow tie.
Do you think uranium has more of a bullish case than gold, if you had to choose?
It couldn't be any more different. Uranium, again, has this application in the utility sense. It's a utility commodity. It's an energy commodity, pure and simple. And of course, you and I know gold is a store of value. It's a currency, and they play extremely different sort of ends of the spectrum.
So what are your thoughts on gold right now? Do you like what you're seeing?
No, I look at the Bitcoin price at 8,000, and I think everything I've ever learned about or read about gold makes me think gold should be at 8,000 and Bitcoin should be at 1,300. To me, it makes no sense. But at the same time, I think maybe this just wasn't the year for gold. I think the Trump trade and the rally we've seen in the broader stock market has kept hedge funds and investors just chasing tech stocks and other stocks that are performing so well. Well, I think a lot of people, including myself, believe it should be much higher than where it is right now. Yeah, it's up 10%, 12% year to date, but I expect much bigger things. But as you know, with what I do at gold mining, we like to see a softer price because it gives us a window to make more acquisitions. Just today, we announced the latest closing of our acquisition in Peru, the Crucero project. So in a way, I don't mind it if it's a bit lukewarm out there because it continues to open this window to make very accretive acquisitions.
Amir Adnani, thank you so much for stopping by.
It's always my pleasure. Thank you.
Thanks for watching our coverage here. We'll have much more for you on Kitco.com.